Well, Santam posting a 12.5% drop in interim earnings. The insurer also saw a 5% rise in its dividend, that to 242 cents, and says that premiums will have a positive impact on underwriting results. That as long as there are no adverse weather conditions in quarter four. Santam CEO Ian Kirk is joining us for more on those numbers. Thanks for joining us today, Ian. So if you just look at that underwriting margin, 1.3%, that's down significantly from the 6.1% that was reported in the previous period. So just talk us through the conditions that you're operating under right now. And when it comes to weather during this period specifically, it seemed to have quite a big hit, or it seemed to cause quite a big hit to the earnings.
Yes, in the 6 months, the weather certainly negatively affected us. Two main areas. Firstly is in the crop insurance business. That cost us, we had a loss, 112 million. We normally would have made profit sort of 40-50 million in that period we would have expected to make. We had a most unusual situation where we had hail in the eastern region in the early months, January, February, and then we had drought claims in the center and in the west of the country in those agricultural areas towards the end of the 6-month period. So that was a very difficult one. The second event was really, it was actually earlier in the year, January, February, in Limpopo. And we had claims in excess of 100 million, which is over and above what we would have expected in a normal period.
Yeah, and as I say, just looking at that underwriting margin, it certainly is under pressure right now at 1.3%. So what are your views on being able to prop that up again? Because relative to the year, 6.1%, it's fallen quite substantially. Yeah,
look, general insurance, as you'll be aware, is volatile. We target a margin of 5 to 7% over the medium to long term, so we're well short of that in the first period of the year. We've got corrective actions in place right throughout all our business units, and I mean, that is our business. We have to get back on track. We've been in this situation before, and our business, you know, we know what to do about it. It is complicated by the competitive environment. The weather hasn't been kind to us, and the rand is particularly problematic because it has a big impact on the cost of replacement car parts, and motor is a big part of our book, so we have to be watching that very, very carefully. There's a number of things we can do, but at the end of the day, unfortunately, it does result in you know, us having to increase rates. The industry is in total. We do it selectively, but unfortunately that's part of the recovery process. And
you talk about the competitive environment. I mean, is everyone in this space right now that they're having to increase rates, or are you prepared to potentially forgo some market share in this environment?
I think to answer your question, everybody is increasing rates. It's not our intention to forgo market share.
Yeah, I mean, you wouldn't
but we do need to balance growth.
Yeah, sorry, carry on.
Yeah, no, we do need to balance growth and profit. And given the situation that we're in, where we're well below our target, we need to focus more on the profit than on the growth. Our growth has been very solid over the years at Santam. So that doesn't concern me to the same extent. I think the priority for us is to get back on track from the underwriting margin perspective.
Another area that you pointed out in your earnings were high growth areas, as you've identified them, in order to diversify the business further. So color that up for us. I mean, what does that mean for Santam right now? Is that geographic, or is that moving outside of the predominant areas that you specialize in right now in terms of products?
Look, our market share, you know, is around 25% in South Africa. It's a big market share. There are some segments that we're underrepresented, but not many. The main issue is for us, as you've said, diversification outside of South Africa. We're fortunate in many respects in that our holding company, Sanlam, is sort of forging the way for us, establishing the footprint in Africa, in India, in Southeast Asia. You'll see in these results, it's the first time we've brought through a return from the business in India, Shriram General, which has been quite nice in a time where we're under pressure in South Africa. So I think that'll continue. It's a medium to long-term plan. We're not planning major transactions in any of those countries. But as Sanlam moves forward, we'll move forward in tandem on the general insurance investments. We also have our corporate and specialist business on the diversification trail, pushing out its borders. And most importantly, our reinsurance business, Santam Re, where we had nice growth in the period, from the international reinsurance opportunities that are available to us. So each business has its own priorities, has its own challenges. But as I said, the priority is to get back to the target margin.
Yeah.
It's not going to be easy in the short term.